Hey everyone, today I'm telling you the reasons that I am planning my next real estate investment during this shifting market. Hey everyone, thanks for tuning in. My name's Brennan Klaus. I'm a real estate broker here in Seattle. I'm going to tell you 4 things that I'm thinking about that I think you can think about too in your own market to see if it makes sense for you to invest during this shifting market. Some of you may think that's a genius idea. Others of you may think that's pretty stupid. But today I'm going to tell you the top 4 reasons why I'm doing that in this shifting market. So this leads me to the first reason that I'm investing in this period. And that's because right now there is a lot of fear in the marketplace. So there's a lot of fear, there's a lot of hesitancy. As Warren Buffett says all the time, there's a ton of opportunity when there is mayhem in the market. And that's exactly what's happening in the real estate market right now. There's a lot of mayhem, a lot of hesitancy because these rising interest rates. People think that the market is slowing down completely, that there's not a lot of opportunity. And it's actually interesting because as a realtor, I see this every single year where not necessarily the interest rates rising, but I see that when people are excited to buy houses, there's even more people who are excited to buy houses. It fuels the competition in the marketplace. Now, when there aren't people out there excited to buy houses, somehow it becomes less exciting for everyone. And that's exactly what I think is happening right now. I think there's a lot of fear in the market because of the rising interest rate. A lot of people have been priced out of the market, which is not a great thing. And I'm not advocating getting into real estate investing if you don't have savings already set aside. It's super important, I think, that you have 6 months or even a year of savings already set aside before you invest in real estate, but this is a great time to invest and diversify. And so that's the first reason that I'm doing this, is because there is fear in the market right now, and I'm in a place where I don't feel afraid. I have those reserves set aside, and I don't feel afraid to actually invest in the market at this time, because I know that even if we go into the big R word, the recession, that I will still be okay if I get through that with the savings that I currently have. So don't invest if you don't have enough savings, if you don't have a comfortable cushion for your life and what you need month over month to live the way that you're living. But if you have that and you aren't afraid and you don't see the worry that everyone else might see, then now is a really great time to invest, because all of that fear is pushing out the competition in the real estate market at this time. Now, the second reason that I'm investing right now in the shifting market is because interest rates are not forever. Interest rates used to be 3%. They've gone up to somewhere around 6%, but that's not forever. That's not long term. Now, you shouldn't plan on it coming down tomorrow. That's probably not going to happen. But I do think, from everything that I've read and heard from lenders that I work with, that eventually the interest rate will come down again. When we tip into a recession as an economy, oftentimes the interest rate will come down to spur some growth, to actually get people out there spending money again. This is what I believe will eventually happen. Now, I don't have a crystal ball. I can't tell you this will for sure happen, but I do believe that the interest rate will come down. Now, some people are talking about you could get an ARM or an adjustable rate mortgage, which is less expensive now. It has a lower interest rate. Or you could buy down your interest rate. That isn't always the smartest idea. It depends on how long you're going to stay in that loan. But my kind of train of thought is, why would I buy that down right now if I can refinance later at a lower interest rate for free? I don't mean the refinance is free. I mean, you can refinance and get that lower interest rate for free. The refinance itself will cost some money, but you can actually get that lower interest rate for free later. I'd rather use any credit that I'm getting from a seller to actually cover some of my closing costs or cover the next few months of HOA dues if I'm buying a condo. I don't plan to buy a condo, but if I did that, that's what I would use the seller credit for, as opposed to buying down that interest rate. My plan would be to get in now at this interest rate and refinance later when that interest rate has dropped back down. Now, will it drop to 3% or 2% again? No, maybe not. But there is a possibility that it comes down from 6%, and that is the time at which I would plan to refinance. So second, interest rates are not forever. They're not going to be the same forever. They could go up. They could continue rising for the rest of the summer or even the fall, and they may not come back down for 2 years. But I see that as a shorter term debt, a shorter term cost that I'm taking on, as opposed to a long-term debt. And most of the investments that I invest in are for 30 years. So I'm thinking about a very long horizon. Well, they're for longer than 30 years. The loan itself or the mortgage is for 30 years, but I'm thinking of an even longer horizon because I plan to use the investment as a rental. I may actually live in it for a little bit and then use it as a rental after that to make it my primary residence. And that's a whole different story because if it's your primary residence, you can put less money down. So different story, but the second reason is because the interest rate is not forever. Now, the third reason, and this is a little bit more specific to Seattle where I am, is that the cost of a higher interest rate could be the same or less than the cost of actually competing against other buyers in the marketplace. So let me explain this one a little bit. In Seattle, for example, a lot of homes that are bought this year in 2022 actually sold for 10 to 20% over the listed price. Now, that could be different based on the location, the neighborhood, the quality of the home. Just giving you an example. So let's say the home was listed at $1 million and it is sold for 1.1 million, for example. So 10% over the list price. Now, the payment for a $1.1 million home on a monthly basis, so your payment with the mortgage rate, the interest rate being around 3%, could actually be more than your payment on a mortgage for $1 million, so where it was listed, with a higher interest rate. So we're balancing what the monthly payments will be. So in Seattle, I could pay 1.1 million at a lower interest rate, or right now during this shifting market, I might be able to get that house for $990,000 at a 6% interest rate, but that interest rate, even though it is higher, that monthly payment may not be as high as the monthly payment for a $1.1 million home. Obviously, I'm not using real numbers in this scenario, but I'm just trying to illustrate a hypothetical for you. So if you're paying more because there's competition, right? You're bidding from 1 million to 1.1 because you're bidding against other buyers to win that home, even at a low interest rate, you may be paying more monthly than if you could buy that home for exactly the list price, $1 million, even though your interest rate is 6%. Now, there is a break-even point in here where that rate at 1.1 or that monthly payment at 1.1 may not be higher than the monthly payment at 1 million for 6%. That is something that I'm going to think about with my lender and discuss with my lender. Where does this make sense for me to invest? But the whole point here is that you can't think only about the interest rate. You have to think about the cost now with your interest rate versus the cost of buying when you're competing against a bunch of other buyers. Now, this isn't always in every single market across the US, but it is certainly true in Seattle where we have a ton of competition and there are a ton of buyers out there when the interest rate is good. That said, you may be in a market that is depreciating or doesn't have competition. You need to think specifically about your own market if you're thinking of investing for yourself. But in Seattle, it makes a lot of sense to actually invest in the market right now when there's no competition versus investing when there is a ton of competition, even though the rate is lower. Now, the fourth and final reason that I am investing during a shifting market and planning my next investment is that the rental rates are increasing. Again, this is specific to my market, so you do have to think about this market by market. And the cost of keeping cash on hand during inflation might mean that I might not be able to afford something in a year versus what I can afford now, because with inflation, that money that I have sitting in my bank account may not actually be worth as much in a year as it is right now. So I'm thinking about the rental rates, right? I'm thinking about if I bought a property that I wanted to rent out, that rent is probably increasing year over year, especially in Seattle, it is. And my mortgage would be locked in until I refinance, right? So it's a consistent rate, at least for now, versus a rent that is continuing to go up year over year. So I, as an investor or a landlord, could actually continue to make money and raise the rent year over year when I own the property. So that could be a benefit to me, and it's not going to do me harm when the rents go up. It will actually help me, to make more money on those investments. Now, the other part of this is, what is my cash worth today versus what it will be worth in, let's say, a year. So if inflation continues, my $10 today might not afford what $10 could buy me in a year. I might be able to afford today with $10 a banana and a gallon of milk, but in a year, I might only be able to afford the milk and not the banana. So it's important that you think about, if you are holding on to cash and not investing, is that going to hurt you in the long run? Is there actually a better investment? For me, that's real estate. I love real estate, but I also know it very well. That's a better investment because I do see the appreciation. I see the impact that you can get by investing now and holding on to that asset so that it continues to appreciate over time. Now, real estate is not for everyone. Some people like stocks, bonds, other investments, but for me, it is a more exciting investment and one that I know that I can find in a market that will appreciate, like Seattle. So you have to think about your market stats for rental rates. You also have to think about the appreciation in your market. Even if your home appreciates on average 5% per year, what is that going to give you in terms of equity? Or if you went and sold that property in 2 years versus what your money might buy you just by sitting in the bank account, right? Your $10 is still going to be $10 in 2 years, and it might be actually not getting you as much, whereas in 2 years with appreciation, it's going to be worth more than $10. So you have to think about where you're investing your money as well. So it's super important that all of these things are taken into consideration in this shifting market. There's research you have to do and make sure that you know that it's a solid investment for you. But this is really why I'm investing in a shifting market. Number one, people are fearful. There's a lot of hesitation in the market right now. This is a great time to get in. Number two, interest rates are not forever. There could be a plan to refinance. You don't have to hold on to the interest rate you get today for the next 30 years. Number three, the cost of a home when you're competing for it, which might go above list price, versus the cost of a home with a higher interest rate and no competition may actually be better for you. You have to run the numbers to find out. And number four, rental rates are rising, and inflation means that your cash may not be worth as much in the future. So these are the 4 things that are causing me to plan my next investment during this shifting market. I think it's a great time to invest, and it's one where it may not make sense for everyone, but if you have that cash put aside for your safety, for those day-to-day things you need, then this could be the time that you invest and actually have a great opportunity to get into the market. It could even be a great time for a first-time buyer who has never invested before. So it's important to think through these different factors, and that's why I'm thinking of making my next investment during this shifting market. Thanks so much for tuning in. I'm so happy you're here. I'm coming out with new videos every single Wednesday, so please tune in. I'd love it if you subscribe to my channel and like this video. And if you have comments or want to know more about a specific topic, whether it is real estate, investing, if you want something about education in either of those spheres, let me know. I'd love to create videos on anything that you might want to know about. So leave a comment below and let me know what you're curious about. And I can't wait to see you on the next video.